Hi guys, quick update here for YouTube. It's 17th of June 2025. Hope everyone's doing great. If you want to join the group, everything's here on this tab. It's cheaper over 3 months. If you want to pay via crypto, just message me through the Facebook page, and we've got mini and full versions of the masterclass here, which is the well-famed, well-spoken about masterclass sort of educational course on how to trade, analyze and invest in the stock market. Very, very good reviews and very, very useful. We've also got a mortgage amortization course here, which was very useful for anyone who's dealing with an amortized loan. We are going to get a part 2 to this, which is a lot more detailed, going into every single other form of financial credit available, and we're hoping that gets released before the end of the calendar year. That's been delayed for about 3.5 years. Such is the volatility in the stock market, which is taking a lot of sort of time away there. Now let's take a look at the S&P before we go into Bitcoin. So we've had this little crash down based on tariffs, this, that and the other. We don't really follow the news here. We were buying at 5,000 and now we've slowly exited leveraged positions, okay? S&P is still going to go higher. We're still looking at a target here of 4/6s as an absolute minimum, and that then completes this pattern, and frankly the pattern from 2008 to 1970, as well as the pattern from 1930, right? So we're still looking at the 4/6s here. I see no reason, regardless of anything, frankly, including the current geopolitical narrative which is ongoing, why the stock market can't go higher from here. Now, why have we sold our leveraged positions? Because they are decay, right? You're not really supposed to use this for long-term investing. I mean, look at the dangers of doing that, this and this. So I still think it hits 190, possibly 210. However, the higher something goes, the closer it gets to your target. The less you're making on a dynamic risk-reward perspective. We were buying down into here, and that's a very good return on investment. That's about 1% a day compounded over 67 days. So you've outperformed every ExxonMobil investor for the last 5,000 years. This has been going sideways now for at least 5,000 years. That is not investing, and that is the state of every single retail trader. They get stuck into sideways consolidations which they can never get out of. So we've sold our leverage positions, our leaps as well, just in case the S&P decides to go into a short-term correction. Looking at their positioning, I would say over the last couple of weeks, I would say there's probably a lot of retail traders who are now getting long. It would clear this high, then go into a correction. I think Bitcoin is very much due a big breakout here pretty soon, and I've said it for the longest time, where I think S&P is going to get close to highs, close to all-time new highs, or get to new highs. Then the algorithmic hedge funds are going to sort of FOMO into Bitcoin, ready for its next move towards 140. So these two markets are moving in tandem, but not necessarily one-to-one. They don't move at exactly the same time. But frankly, it's been a very good trade from sub 5k all the way up to here. We speak about dynamic risk and reward. Risk and reward is not a static concept. It's dynamic. It's constantly changing. The closer you get to your target, there's very little gain left, and we never want to sell the top. We sell on the way to the top, because there's two other opportunity costs. One is time, one is emotional kind of capacity there too. If the S&P does go into a sideways correction, that is going to kill leaps and kill things like SPXL, and this is known to go into drastic sideways corrections where it's just waste the time BS. So once most of the money has been made, there's no reason to sort of get greedy up here. But for all intents and purposes, though, it still makes sense for it to get up to 190. But we're talking about risk and reward here. So that's the S&P. To summarize, we're still going to 4/6s regardless of anything. Once we get up there, we then have a huge problem, and then we're going to be calling for a top here, a grand super cycle correction, which will be a devastating crash, way lower than the current prices, way lower than 3k 4k on the S&P. That crash is coming. I would say we're less than 12 months away. But it's not going to happen from here, right? It's not going to happen from here. So whatever the news narrative or this, that, and the other, it's not going to happen from here. So this is not possible from here. We're at 6k, right? Just a week ago, we were at 5k. So 4/6s. When are we going to get up there? Well, Is it likely to top before Labor Day? I would say it's unlikely. Thanksgiving, possibly, and then after that you're going into around March 2026. It's very reasonable to suggest this S&P is going to top in the next 12 months. That's very reasonable. I don't think anyone can really argue with that. At the latest, October 26. So over the next 18 months, I think it's a nailed on certainty. It's going to top before then. Personally, I think in the next 9 to 12 months, I think is very reasonable. Like I said, we're already at 6K. We do have mathematical extrapolated targets. I mean, 4 6s isn't the exact target, the exact mathematical target we only share with group members, but that is just for YouTube, just to give you a brief, a vague idea. If the S&P extends, we do have extension targets which are higher than 4 6s. But like I said, when you're holding leveraged products, you have to be careful. We are still holding single SPY ETF from here. And like I said, the biggest concern is when the greatest stock in the history of mankind doesn't make a new high with the S&P. So never in anyone's investing life has this not made a new high with the S&P. It's always made a new high. And as you can see, Apple is an uninvestable asset, and I've been saying that for a very long time. It's uninvestable. You cannot buy this dip. If it's not going to make a new high, it's not worth buying, I don't think, right? There might be a short-term trade there, but if that's not a bear flag, I don't know what is. And we've said this for a long time. S&P was always going to make a new high. The greatest stock in mankind's history is going to do this. And then you have a problem. We've spoken about this. In the last move, the stocks always diverge from the index. Not all of them, mind you. We said Microsoft's going to go to a $4 trillion market cap, 450, 500. We said Apple is going to have huge problems. And eventually, once the index turns over, which it will, Apple's going to move down even, faster than it already is. I think Apple, to me, that's a good buy down there. We are a long, long way away from there. Okay, so understand the biggest concern amongst the many individual concerns we have is the fact that Apple is not making a new high alongside the index. Okay, make no mistake, Microsoft can do what it likes. To me, Apple is the greatest stock ever. I think Nvidia comes very close. Bitcoin as an asset comes very close within the top 5. Microsoft maybe, but to me, Apple has done absolutely incredible things for most investors since 2008, yourself included, myself included. Right, so the pound, we'll go on to the dollar first before we go on to Bitcoin. So we've been bearish on the dollar for a very long time. I'm surprised it's still hanging around 98. Short-term geopolitical, this, that, and the other. There is still this, mental kind of conditioning where anything kicks off, people buy US dollars. I wouldn't be surprised of a sideways short-term correction, but ultimately the trend is down. I don't want to say anything bullish on the dollar. I'll be surprised if it gets above 100, 101, 102. To me, it's a super cycle correction down, similar to what we've had in the noughties and the 80s, and I can show you that here. It just looks terrible. So, we've seen this twice. So, to me, this is the fractal that you should be following, right? You should be following these two here. So, you got one there, then you've got this one here. There's no reason for the dollar to have any kind of sustainable bid up here. And obviously, we've taken advantage of that by buying the low in the pound. Absolutely once in a lifetime exchange rate. That's going to the Brexit vote high at 150, which we all shorted about 10 years ago now. Absolutely incredible top 20 trade that. Unbelievable moves on the pound. The most volatile moves in forex always seem to occur on cable here, or any cable pair, especially the cable the pound yen. So that's going to 150. Euro is obviously going to benefit from a falling dollar too. So all of that is to say the falling dollar helps to validate Bitcoin going much higher, S&P going much higher. Okay, so just getting rid of leveraged positions, that's what a good investor does. They manage their position. Doesn't mean I'm bearish on the S&P. We're making it perfectly clear it's going to go to 4 6s as a minimum, and then there's a potential it could extend further beyond that. Okay, we don't want to give away the exact targets for YouTube because that's only for group members. Now, Bitcoin, ultimately, it's consolidating in a bull flag. I don't think there's any point in over analyzing what's going on. There's analysis paralysis. Okay, if we use the hedge and lee way of thinking, which is basically to look through the forest and the trees, and you just copy and paste this guy onto here and just consider that to be a bull flag, you can just whack that onto there. Even that gets you to 160, right? So the next target is the 140. We have the exact wave count. If you want to know more, come and join the group. I've been saying it for weeks now. Yes, it's frustrating. The S&P has outperformed Bitcoin over the last month or so. Doesn't make Bitcoin bearish. Okay, once the S&P does eventually go into a correction, right? Obviously in the group where you got to be first, be smart or cheat. Before the correction, you got to get rid of the theta decaying products. This is where you got to be very careful holding naked call options without being hedged, or SPXL. Yes, it'll get to 190 from here, but let's be honest, the bulk of the move is done, so you just got to be careful. So eventually S&P is going to go into a correction. Either we're already in a correction and they're going to blame it on the current geopolitical narrative. You got the corporate tax drain, you got end of quarter, end of half year portfolios that have to get rebalanced here pretty soon. We're bound to get some kind of selling here sooner or later. Then my take is that that money's going to follow through and then start pumping Bitcoin. So frankly, Bitcoin's due a pump here very, very soon. Maybe over the next, I don't know, a week or two. It's consolidating very nicely. We've got inside candle failure. We've got an inside candle on the monthly, and the quarterly is a bullish engulfing candle. I don't think you can sell Bitcoin here. I don't think you can short it, and I would be careful leveraging this asset class. Now, just before we go on to the more detailed account, we'll have a look at Coinbase. Now, we were buying Coinbase at 36, selling it into the multiple hundreds. We've said for the longest time, imagine there's a mirror right here, right? So this is effectively, imagine the mirror image of this exact fractal, and basically we're going to do this last little bit, okay? This is this, that's this bit is this bit, and now this bit is this bit. So it makes perfect sense for that to make a new high. And that I wouldn't be surprised. Is it risky? Of course it is, right? When you're used to buying this, like the whole group was at 32, selling it into here, and here, you don't really want to buy it up here. Looking at the NASDAQ stocks, they're diverging away from the NASDAQ and the S&P. But it still makes, it's still somewhat sensible. I think you can just about justify still holding Coinbase, given that Bitcoin's nowhere near a top. If Bitcoin was near to a top and Coinbase was still at 260 and the S&P was at like 6,500, I wouldn't really have that same opinion. But Coinbase, I think, is reasonable to suggest if you're going along with the symmetry of the mirror image, makes a new high, brings in some euphoria. I think you can. That's just about justifiable in my eyes. But obviously, if you were in the group 2 years ago, you've had one of the greatest buying opportunities in human history there at 36. But I think it's just about justifiable for it to make a new high and get to the 400. I think I don't really have a problem with anyone going with that perspective. They're going for the mirror image. They're going for the new highs. They know Bitcoin's nowhere near a top. So I think I can just about get along with that. Is it going to go 5, 6, 700? I don't want to make that call. I'm just making it makes a new high call, brings in some euphoria. That's it. That's all I have for you on Coinbase. I would say is better than MicroStrategy, which is really struggling up there, and I was better than Riot. So if you had to choose one proxy, because I understand some people can't buy Bitcoin for some reason, different laws in different countries, and so they have to show their opinion via a stock, and so they buy Coinbase, and that's fine. Some people want to do that, so that's fine. So I can just about see the reasoning behind there to buy Coinbase, and to me that is the best proxy currently, because it's got the best earnings, the best fundamentals, and I understand Circle. I mean, have they IPO'd yet? Or I think they have IPO'd, haven't they? I'm not sure if this is the one. Yeah, just a vertical line, isn't it? So yeah, I mean, that's just a shortable candle right there. So that's basically top right there. So that is their Circle partnership. So they are making a hell of a lot of money by holding US dollar tether on their reserve and then claiming interest on top of that. So that was the big fundamental analysis on Coinbase that we did 2.5 years ago. Anyway, for those who are not in the group the last 2.5 years, well, the last 7 years, you've missed out on many millions there. Anyway, so Bitcoin, there's no need to overanalyze this. I'd be shocked if it gets much below 100,000. No one cares. it's consolidating. S&P is going to eventually consolidate. That money has to go somewhere, and that's short-term algorithmic money. They only trade over a 6-week, maybe 3-month time frame max. Usually it's 6 weeks. I think it's consolidating very, very nicely, and we're looking at a breakout here pretty soon. I see no reason why it can't go to 140 and then higher from there. But if you want to know the exact counts, just come and join the group. We're covering all of these markets in a lot more detail than we ever show on YouTube. The exact wave counts and the Elliott wave I can only reveal on YouTube. So that's it for Bitcoin, really. So a bit more short-term consolidation, maybe even going into the end of the month here as the portfolio is rebalanced. And then Bitcoin ready to rock and roll going into Q3. And inside candle, monthly inside candle, and 3 month, that's pretty much a bullish engulfing. So I see nothing bearish here for Bitcoin, ready to rock and roll going into Q3 for Bitcoin. Now, before I finish, as we have said for the longest time, there is no altcoin season yet. I think the biggest altcoin season in human history is going to occur here soon, but not yet. And the problem is this. Now, there are many proxies you can use to show you an altcoin season. If you wanted to, you could do 100 minus this. It's the same thing effectively. The altcoin dominance is going to go to about 29-30%, or to flip it on its head, the Bitcoin dominance. Ideally, it runs this high, and this high, and it gets to 70%. Okay? And the headline here, as you will see very soon, is going to be something along the lines of altcoins are dead. Then, as far as I'm concerned, that is the flat pattern complete. That is an unbelievably large flat pattern. 7-year flat pattern, which technically has been produced over the entire length of us doing YouTube videos ever since the greatest shot caller in history burst onto the scene with a gangster lean back in October 17. That to me is a flat. So once a flat is complete, technically we have to retrace, as we mentioned on the last video here, to at least 50% off the A to C wave distance, or better yet, we come all the way back down again. And that is the altcoin season. The catastrophic collapse in the Bitcoin dominance from 70 to 31%. So still, as of this time, and we've been saying it in the group for a long time, around the turn of the year, there was a different interpretation. Short term, the altcoin dominance could have retraced because the initial target was 60. Then as volume started coming in, Bitcoin started to reverse. It was clear 70 was the ultimate target. So there might have been a short-term altcoin season which we took full advantage of. The real altcoin season is not here yet. I think it's coming though very, very soon. But we need everyone to be convinced that altcoins are going to go to zero. And right now, I don't think there's any real justification to have any large altcoin exposure yet. People will fall in love with certain coins like Solana or XRP. We made a 50x move on Solana over the last couple of years. We don't care. That could go to zero. And we have our eyes on a few coins. But until the Bitcoin dominance properly starts to collapse and go down, and Bitcoin starts to consolidate, the money will then filter through into the smaller altcoins. Only then is your favorite altcoin going to have a pump. And that's the problem, right? So XRP, I mean, we can talk about this all day long in terms of the fundamentals. This is the problem. So the USD side of XRP's equation might be getting supported by Bitcoin, but this is very clearly getting completely wrecked because of the Bitcoin dominance. I mean, it's effectively inverse to it, isn't it, right? You can see a very clear inverse correlation here. Yeah? So it's very clear. Dominance has gone from what? 55% to 64%. Once again, it doesn't sound like a lot nominally. Nothing sounds like a lot nominally, but we're not here to deal on the nominal scale, right? We're investors here. We deal often on the logarithmic scale when you're dealing with percentages. 55 to 64, you're looking at it in the wrong way. Yes, it's a 9% move nominally, but what is it as a percentage? I would guess about 20%. Let's have a look. Well, let's just work it out, because that's working out off the XRP BTC. What's 9 over 55? Yeah, 16.3%. That is a huge move. So that's the problem. We got to look at things in the proper way. And we've spoken about this since the first YouTube video. You want to use the linear chart for perspective. Don't get me wrong, it's very good for perspective. But all your calculations have to be working off the logarithmic chart. XRP will never get any traction as long as the Bitcoin dominance is going up towards 70. Now, once we're at 70, well, different story altogether. The altcoins are pretty much bled as much as they were going to bleed. So this is the problem. So I know a lot of YouTubers who are constantly focused on this, but we have to look at these charts properly. Why can't this BTC pairing go all the way down to here? Or to here, frankly? Like I said, once we get down here, another story altogether. Obviously, we're not going to be bearish on XRP from down there, yeah? So we have to look at these charts properly. I think a lot of people are calling for altcoin season. They're not really there. There's no real justification at time of doing video for any major altcoin exposure. Obviously, a couple of weeks down the line, months down the line, that may change. But for right now, as far as I'm concerned, the Bitcoin dominance is forming a flat pattern. So your favorite altcoin is going to struggle, okay? And if you want to know more about the exact charts, the exact timings of these moves, you know, it's not just where things are going to turn. It's important for when. You know, when is that going to hit 70? Very important information. That's what we try to do in the group. Forecast where something is going to go and by when. And we try to stay away from buying ExxonMobil and holding it for 10,000 years. Anyway, if you want to know more, come and join the group. That is the update.